Hello traders, welcome to your Follow the Bots S&P 500 Daily Market Recap, sponsored by Zaner. Since 1980, Zaner has been helping futures, commodity, and forex traders trade smarter, faster, and easier.
Hello traders, Bill Duryea here with Follow the Bots. Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Tuesday, September 17th, 2013. On Sunday, S&P futures gapped up above Friday's close and traded above last week's high at 1684 and rallied up at or near the multi-year high at 1705. Sunday's Globex rally represented the initial retest of the multi-year high. Market participants responded to the retest by selling into the high. Prior to Monday's open, the market traded down modestly below 1703, 1704. And at Monday's open, the S&P auctioned back up at or near 1700, but failed to retest the overnight high. Selling pressure was dominant at the open, and the S&P sold off, initially pulling back at or near 1692. There was a modest retracement back up to 1698 before the selling returned, and the S&P traded lower into the close, pulling back to 1688. Ideally, we would have liked to seen the S&P trade back down to Friday's close at 1682 and or last week's high at 1684 and retest support at the breakout point. However, during the overnight session, the S&P pulled back no further than Monday's low. At Tuesday's open, price auctioned above the overnight low and traded back up to 1698 at or near the micro resistance level that developed during Monday's market structure. Following the initial up move to the minor resistance level, high-frequency computerized trading programs dominated the remainder of Tuesday's session. High-frequency computerized trading has come to dominate U.S. markets. In the context of the S&P futures, the high-frequency market maker algorithm has a distinct characteristic. The price structure indicates that the execution sequence is limited to approximately a 2-point range. The algorithm auctions up 2 points, pulls back 2 points, auctions up 2 points, pulls back 2 points, and this pattern is called a recursive price sequence. Research into the subject matter of high-frequency market making indicates that in the S&P, the market maker's objective is to fill bids and offers within a narrow trading range sequence of approximately 5 ticks. Within that sequence, the market maker looks to profit 3 to 5 ticks. One of the charts that we use to look at the market development during the day is the micro 5-tick range chart. Here is what the market development looked like during the overnight session. Each of the sample bars that you see here are 5 ticks. Overnight, when the S&P retested Monday's low, you can see the sequence executing between 1688 and 1690. The recursive algorithm reverses direction following the 2-point series and thus it is basically a scalping strategy wherein the market maker algorithm fills bids and offers within a limited, narrow trading range. One of the tools that we use to track the presence of the computerized high-frequency trading programs was developed by Carl Weiss at Algo Futures. As you look at this micro-range chart, you will see that at various price levels there are alphabetical abbreviations. SPW stands for Sell Programs Waning. BPW stands for Buy Programs Waning. Algo Futures has developed a suite of algorithms that are geared towards focusing the presence of high-frequency computerized buy and sell programs. As we look over the developments that occurred Tuesday, you can see that when the market auctioned up off the overnight low, the computerized trading robots were executing primarily to the buy side. Thus you see represented on the chart high-frequency buy surges. In conjunction with our digital filters, both the Kalman filter, which plots the longer-term development of the day, as well as the Gaussian filters, which plot the micro price series, the path of the execution sequence can be tracked very precisely. The polynomial regression channel is designed to model the micro execution sequence. Order flow events that occur at the upper or lower channel represent what we refer to as trading bot rotations. As you can see, as the S&P rallied up off of today's low, the digital filters maintained their exponential component sloping upwards until the S&P retested micro resistance at 1696. It was at that price point that the buy programs that dominated during the open ceased executing to the buy side, and the high-frequency market maker algorithmic pattern emerged. Up 2 points, down 2 points, up 2 points, down 2 points. And this pattern remained consistent into the close. There was a minor buy surge in the final hour of the session, and the range extended modestly above the prior high. Using a point and figure chart, which aids in filtering out time, you can see that once price auctioned up above the overnight low, the up move paused and the minor consolidation continued through the close of the session. Coming into Wednesday's session, support at last week's high and Friday's close are considered the minor reference points. Near-term support is down at or near 1674, and the start of last week's up move at 1668, 1670. Resistance is located at the multi-year high at 1705. The major event dominating tomorrow's session will be the forward guidance coming from the Federal Reserve Open Committee meeting. It is widely expected that the Fed will announce some form of tapering or reduction to its $85 billion a month bond purchasing program. Depending upon the extent of the Fed tapering, the market reaction could be mixed. Many are speculating that the Fed will only modestly reduce the amount of bond purchasing it is currently employing. This has been referred to as tapering light. In the event the Fed chooses to follow a modest path with regards to winding down its quantitative easing, There is the possibility that the S&P will auction above the current multi-year high. It should be noted that stop-loss orders are typically resting 2 points above the previous high. In the context of today's close, at or near 1700, range extension above the current multi-year high could see the S&P auction up to 1715, 1720. However, it should be pointed out that the high remains resistance until penetrated. In the event the Fed tapering is more substantial and the market participants react negatively to the Fed reducing its quantitative easing, we would not expect Monday's low to provide significant support. Indeed, we would expect to see the S&P trade below 1684 and pull back at or near 1674, 1670. That concludes our daily recap for the S&P 500 for this Tuesday, September 17th, 2013. If you would like to follow our real-time commentary, we invite you to visit us online at www.followthebots.com. Log in and join us some morning at the open.
For more information regarding Zayner's brokerage services or the content of this broadcast, contact Neil Rogers, nrogers@zayner.com, 312-277-0135. This is Cuerva from Follow the Bots. Happy trading.